Alright, hello guys, glad to have you on board again. Today on the regular Wednesday schedule, we're going to talk about the flow and range trading kind of strategy update. So remember that not a lot of things have actually changed despite the FOMC, which we cover in the greater details in the weekly updates. In here, we're just not going to pay any attention to this. Just once again, looking blindly at the signals that we have on the charts and applying the strategy accordingly. We don't take any advice coming from external factor or any other catalyst like that, not even depending how important they are. That doesn't undermine the reality that they are important. It just means your strategy applications in these kinds of range and flow sequencing should not take into account those kinds of events. So really that's going to be what we're going to be doing this week. So just basically looking at it from a technical standpoint. And what we have this week is, remember, we're going to cover two separate kinds of strategies. The flow sequencing, which is in a 4-hour chart reference out of the monthly potential divergence sequence we are trading on. And we need to be very cautious with that because we have made the 3 consecutive bullish flows, which means we're now looking for the actual market top, which should be a consecutive set of 2 bearish corrective flows. So remember as well that we might eventually want to have exposure to these bearish flows. We know how they are supposed to sequence. We just have our time figuring out the actual market top. It's very dangerous, much more dangerous to actually trade and try to trade the first bearish corrective flow than it would be to do the second. So my own recommendation has always been, if you want to expose yourself to finding this market top, it only could be as a range arbitrage strategy with your kind of bullish portfolio exposition. Otherwise, I sincerely recommend not to try finding this market top and waiting for the second bearish flow to expose yourself in a much safer perspective. The other opportunity, which to me is less risky because we definitely have consecutive signals for this, is that, well, we would look at the daily chart, okay? And remember that out of these daily charts, what we have now is another range strategy. The context in here have been reversed, and we have violently retraced right back up in here to what was the area of a potential double top. Despite that, we were still having all the required signal for a bearish third range boundary, meaning that we've retraced more than 61%. The reversal happened inside the context and triggered a trend signal on the momentum. So as of that point in time, we had clear evidence that the market was eventually heading lower. The target would have been below the context and below the previous low point with closes. So this was the target for this trade. Remember that I told you the other day, prior to the FOMC, I'm not going to pay any attention to the catalyst itself. I'm just going to take the trade that I missed by trading at relatively similar prices. Also acknowledging that there were multiple choices to happen afterwards this catalyst. The first one being the flow the bearish third range boundary triggers itself violently after the FOMC meeting and goes at the validation territory, which is retracing back to the previous low point and or the support context. So that would have been target number 1 for confirmation. Target number 2 would have been the objective, targeting the new lows. Nevertheless, we had something different because after the actual catalyst itself, which should not be accounted for in this range, in here we have made new highs. We're still marginally trading above the previous high point. So question is now, is it really like the third range boundary that we have in here kind of validated and now gets broken, or is it just going to create a neutral one, which means we could have this kind of strategy in which this can retrace. The target for this new range now, and if you've taken this trade, can no longer be the one that you entered the trade with. It can no longer be a bearish third range boundary. We have now made candle closes above the resistant context, and we've actually attempted to break the previous high point. So it could definitely be two things. If you've taken this trade, now the best case scenario is for you to reach the target, and the target for a neutral third range boundary is going to be the mid part of the range to confirm the trade. So this is actually what's going to happen now. Other option is, well, you're taking that trade and you're going to be stopped out. So remember that the market will always do what it has to do. We just follow it blindly. So that's all there is to me in this market structure for the S&P 500. Either you already traded the third range boundary and you already risk taken. The only adjustment though is that now the third range boundary, if it ever goes back down to the prices of your targets should be higher now because the bearish third range boundary targets are no longer viable. If the third range boundary ever plays out by rejecting the market top violently, this would be a marginal market top reaction and basically reintegrating the range very quickly to the mid part range. That's all there is. For the 4-hour chart, remember, until we don't, so long as we don't see the first flow, be very cautious if you're trying to expose yourself to that endeavor. It's really all there is. When it comes to WTI, we're going to do a quick overview in here. The longer term strategy in here is the weekly flow, which we are still accumulating in the area of that rising moving average, still awaiting to get either one of these two things. That means either creating a third range boundary or eventually squeezing momentum. Remember that if you squeezing prices. Remember that if you squeeze the prices, that's also telling you that the range is mature. So this is one of very rare cases, but it could very well happen as well. Remember that what we want is to get a third range boundary. But if you end up having a squeeze and then going to the previous all-time high or the previous market top, that would definitely be suitable to me to trigger the second flow. That's really one alternative that I'm actually considering, but we're far off doing it. So either the WTI is long-term maintained to accumulate in that price area up until we actually squeeze prices, and up until that happen, the only thing that could very well play out is go to build the third range boundary, eventually retrace afterwards, and the flow should sequence itself afterwards. Remember, we need to wait for that third range boundary to happen, and we haven't yet. All right. When it comes to silver, the actual flow in here is much more bullish. It's already triggered, and we've already broken high, which means all your stop losses are at break even. As we have stated previously, by the end of the month, we're going to get an update because of a new quarter. And basically what we're going to get is a higher context, and that will be necessarily the target for us to get to reach out to. Because expect the context to finally get to cross over the rising moving average, which is a sign that our second flow is maturing. It is getting momentum and getting advancements in the prices. And so long as we don't see any signs of reversal and a potential third range boundary following it, then there is no reason for us to be worried about any of it. So it's really all about that. Let yourself ride that wave. Don't try to anticipate any potential thing like it would end there or there. If you really have taken large position sizes, all the things you can do is to define some price tags in which you expect to eventually lock some partial profits. But also remember that they need to be marginally reasonable, low kind of profit-taking targets, like 5–10% of the trade. Don't get yourself out of a trade that does well. It's the #1 strategy to want to be a successful trader in the duration. So that's all there is for all commodities. So be very patient. We're diving into long-term things in here, and only your patience can fail you on that perspective. Okay, regarding cryptocurrencies, very, very quickly, in here we go Bitcoin first in a 4-hour reference chart, nothing out of the ordinary in here. We're still into that massive, massive range, which, if I recall, the entry prices for the third flow was on the lower Bollinger Band, which, come on, please indicators, can you actually work? Okay, give it a second to plot. Yeah, I don't know. Well, let me pause for a second. All right, sorry about that. So here we have it. Remember that we've entered at the lower Bollinger Band, targeting the third and final flow, though. And what happened since then is just this massive bunch of volatility alerts. And this week around, we've got a new one. So we need to be very careful about that. That means market is attracted like a magnet by the Bollinger Bands and or the moving average. We're trading somewhat across this moving average with a squeezing pattern, which leads me to believe that, well, two things are going to happen out of this. Is that we're going to reject and go right back down to the Bollinger Band, trying to find some stop losses, or we're going to get finally challenging the top of the range, where the higher Bollinger Band is somewhere around 72K. So it's hard to say. Once again, don't try to outsmart the market. Just be smart enough to understand there's no way you can control it. So just follow it and know that until then, you've taken the risk, you know where your stop losses are, you know where your validations and confirmation targets are, and anything in between is noise. So that's exactly the way I am standing for crypto at the moment. And what goes into Ethereum is a slightly more different picture, because in here, remember, we've entered a trade that have somewhat gone wild for those who haven't figured out that volatility alert and the massive liquidations we had over the weekend back then. And remember, the topic to me in here was if you ended up being stopped, and you would see the tremendous amount of standard deviation to the Bollinger Band here, which Bitcoin never experienced, by the way. So this massive Ethereum and the performance following after, like everybody shitting on Ethereum for outrageously stupid reasons. But once again, these are the kind of external elements you should not account and factor for. So in here, if you've addressed the volatility alert and moved your stop losses further away not to get caught up, then congratulations. If you did not and got caught up, up, the option for you was to either accept the loss and move on to another trade, or consider eventually retaking the trade with a limited risk that time around. Because if it validates, remember the risk rewards for this new trade is much better than the previous one. The market has gone retesting that level precisely, which is 2100 and or so, and this is definitely an area that for now has built a slightly higher low. So the market momentum might still be in favor of the bulls here, is still lagging severely regarding Bitcoin. Remember, Bitcoin in a 4-hour reference is trading across the moving average. So right now, Ethereum is still much more depreciated in terms of price. So if Bitcoin goes towards a confirmation, which is the top of its range, remember that Ethereum could very well trigger a similar kind of alert. And if Ethereum stands to trigger a volatility alert and does that, oh boy, those who sold Ethereum for Bitcoin are going to have a painful trade. So that's really all I'm saying. I don't know. I think once again in here, in the longer term picture, the ones that we're following each and every week, I still think fundamentals are making a different call than the market prices, in which they severely depreciated Ethereum for outrageously stupid reasons. But nevertheless, remember that this is all one step aside from what we do here. If you traded the 4-hour chart flow, all the information you need to pay attention to now is, in my humble opinion, only if we get another volatility alert, I will deem these kind of viable volatile scenario as viable. So that's really all there is. Until then, it's nothing but speculation on my side and warnings that I think this kind of pattern could actually trigger. But until I have it in front of me, it's nothing but words. And there's nothing you do in a flow sequencing with words. So once again, either you retaken that trade, got stopped out, or didn't. All that matters is if you still have a trade going on in this thing, there's nothing for you to do until you either stopped out again, or stopped out altogether, or going back up to 4,000. And that's the reason why we've mentioned the risk-reward ratio coming from your stop-loss sizing to your potential profit, because remember, in a flow, you don't know how much profit you're going to make. You just know the minimum profit, which means there's no way you take profit Ethereum until it gets 4,100. And we're trading pretty damn depressed against this price. Hence why I said greater risks, but far greater rewards if you take the risk on Ethereum. Hence why I have done it personally. That's all there is. And remember, we also, I think, mentioned Adam very marginally last time around to say, well, I see some kind of signals in which the 4-hour chart is getting beyond overbought condition, which I kind of like. It might be a good sign that we're breaking some cycles and we're getting beyond the targets in the 4-hour chart. But remember here, just like Ethereum, Adam has been massively depressed. Just look at the distance we are standing across from the 4-hour moving average, and the 4-hour moving average has been trending down for, wow, a long period of time. So remember that one. We have the volatility alert. It's still valid until somewhat like early October. Be very cautious, folks. That means the price is looking for Bollinger Band. If the Bollinger Band is traded or going right back up to the moving average, that could also trigger some interesting stuff. For now on, also be very cautious on Adam. Remember that if you want to trade a flow sequencing here, because we definitely have traded the bottom of a monthly range there, then there is still a possibility to trade a flow sequencing, but that would be the first one of the threes, which means, well, why are you willing to expose yourself to the first one? It's not part of the flow sequencing. You need to let it happen. So hence why I've told you, be very cautious. Look for this potential flow if it does actually trigger. And the event for this to be confirmed is you want to see the support context, first of all, being reversed. And there's likely possibility for this to happen as we're crossing above the resistance context now. The second option is we need to see this context rising above the flat or slightly rising moving average. And if we have that, you would be saying, I've got my first flow, though I'm going to buy on the moving average or the lower Bollinger Band. That's all there is to know for you if you want to trade Adam flow sequencing. And I'm going to leave you guys with that, okay? So stop on speculation. Don't pay too much attention to external information. Despite some of it being actually relevant in the larger frames of our weekly updates, there's nothing you should account for if you do the flow or range trading strategies. And I'm going to leave you guys with that. See you next week. Bye-bye.